Now, let me ask you a very simple question, okay? What is the most valuable asset of an organization? Is it the building? Is it the machine? Is it the coffee vending machine? No, definitely not, right? It is the people, the human resource. But here is the twist. While companies can record the value of the furniture that they are having, the laptop or vehicles in their accounts, the value of employees that is often invisible on a balance sheet. And this is where human resource accounting or HRA, human resource accounting, HRA for short, comes in. This is a technique that is used to measure and report the value of human resources in financial terms. Have you heard of human resources accounting anywhere else? Have you learned about it in MMPC 4? We had the basics there, right? This is just building on it. Human resource accounting. So, what exactly is human resource accounting? Can you remember? Can you recollect? Well, it is that process of identifying and measuring data. Identifying and measuring data. Data about what? About human resources of the organization, and then communicating this information to any interested parties, whomsoever it may concern, like managers, HR heads, even investors. So, the idea here is to treat employees not just as a cost, but not just as a cost to the company, but as assets who can generate returns, just like machines or buildings. In a way, if you think that we are going back to the very early days of viewing humans as resource, like land, labor, sorry, land, machine, factory, building, things like that, in a way, yeah. So that is what the idea is, to treat employees as assets. Now, HRA helps organizations understand the true worth of their workforce and therefore make smarter HR decisions. So, can you think about can you guess what the objectives of this HRA will be? No, I don't want you to read from the slide. What in your words, can you tell me the objectives of HRA? First and foremost, we are measuring data about the value of human resources. That means the first objective is to measure the economic value of economic value of these human resources, these people, the employees. Then, why are we collecting this? In order to take better decisions, right? So, the second objective is to aid in decisions relating to HR. What are the decisions that relate to HR? Hiring, firing, right? Training, promoting, transferring, all these things. So that is the second objective. Then the third objective is to support long-term HR planning and budgeting. And finally, to help senior management evaluate the effectiveness of their HR policies. So you can think of it like this, right? If HR is the engine, if organization is the car, then HR is the engine of that car. And HRA is the diagnostic tool that will tell you how efficiently that engine is running. Now, let us go back in time for a quick history lesson. It's been some time since we did a history class, right? Don't worry. I'll try to make it as simple and as clear as possible. So, this concept, this whole concept of HRA actually started getting attention in 1960s. Okay, this is when Eric Flamholz, who was a major contributor to this field, he outlined the development of HRA in 5 stages. So the first stage, since it began during the 1960s, right? So the first stage is during that 1960 to 1966 period. So this was just when academics were exploring the whole concept of human resource accounting. It is like, sort of like planting seeds without knowing what these seeds are. going to grow into, from where the seeds came from. Then the second stage of this HRA is happened during the 1967 to 1973, that era. And here, during this time, this whole idea of HR accounting gained momentum, and it was used for HR budgeting and planning also. And the third stage of HRA is during 1974 to 1979. And here is when things were taken to the next level, because companies now started linking this HR data to strategic decisions. And the fourth stage happened since 1980s. Here, sector started growing, and that made people the core of business. So, therefore, HRA became ever more relevant. And then finally, the fifth stage, which is also called as post 1980s. So, that is post 1980s. That is another stage. This is the fifth stage. So far, this is the final stage. Here, organizations started using both financial as well as non-financial data to assess the people. So, yeah, so from its humble academic backgrounds during the 1960s to a very, very practical business tool nowadays, HRA has had a great, what you can say, a good amount of evolution. So now it is the post 1980s, but soon enough, in a couple of years, we'll have the sixth stage, post AI, right? How AI is influencing this whole concept of HRA, that is going to come up in a few years, right? Theories might already be there happening. Organizations might be doing it. So soon enough, we'll have some theories getting added to it as the sixth stage. But right now, it is only till the fifth stage. We are actually, you know, uh, to be honest, we are actually seeing a big shift here in terms of management, businesses, everything. With AI rising like crazy, like weeds after rain, we are going to have a very big shift in management. So you guys are learning management. I want you guys to be on the lookout for news. I want you to be on the lookout for how AI is changing businesses. Very important, because we are right now in the making of history. Okay. Now, there are two very popular models for HRA, human resource accounting, that you must be aware of. First is the Skinner model, and the second is the Lev and Schwartz model. Now, the Skinner model calculates human resources value according to or by looking at their current role. What are the possible future roles that they can, what you can say, um, they can get into, and the expected length of service. So it considers things like promotions and resignation. It is like trying to predict a cricketer's entire career based on the early IPL matches, right? That is Skinner's model. Then coming to Lev and Schwartz model, this is more widely used kind of model for doing HRA in India. This calculates the present value of all future payments like salary, bonuses, perks, all those things that an employee is expected to receive until retirement. So it is like saying this person is going to earn rupees X over the next 25 years. So let us record that value today. That is how HRA is done through Lev and Schwartz model. Okay, now let us understand how this whole HRA process also works. Okay, so as usual, by now I'm sure you must have got an understanding of how all these kind of processes happen, right? The first is the company will identify all its human resources. It may be employees, it may be consultants, temporary staff, whoever it is. All human resources within that company, it will identify. And then it will classify the cost of having each of those humans as resources. It could be direct cost like salary, it could be direct costs or indirect costs. So direct cost could be salary, training expense, and indirect cost will be office rent or internet bills. And once it classifies this cost, it will measure the performance. So how is HR effort measured? using metrics like productivity, innovation, customer satisfaction, and all. It will measure the performance of these human resources. And once that is done, we will assign a value using methods like activity based costing or economic value methods and all. At least you have heard, right? Heard these terms, right? In earlier semesters. Yeah. So using all these kind of methods, we will assign a value. And once we assign the value, we will create a report and summarize all these results into report, and we will communicate it to the management so that they can do all their planning stuff. So in short, HRA involves gathering the data, calculating the value, using that insights to improve their decisions. Now, let's say you have a dream team, okay? Maybe Avengers or maybe even your college project too, right? So HRA measures the value of groups. HRA measures the value of individuals, yes, but it doesn't just end there. HRA can also be used to measure the value of groups. So group value measurement, what does that do? Group value measurement looks at how people perform together, because sometimes the result of a group could be greater than the sum of individuals taken together. So, models like Likert and Bowers consider inputs like the structure, processes like communication, and outputs like performance. So, if your team has great chemistry, if they can deliver results, then that value will get captured. Now, there is something very important that we have to talk about with all this HRA talk and all: tracking money spent on your people. So HRA is all about human resource accounting. So what it has to track the money that you spend on your people, right? So what are the cost? We said there are direct cost and indirect cost. What is direct cost? Recruitment, like putting in ads, interviews, training and development, the salary, the benefits, the employee engagement programs, even outsourcing HR services. All these things are direct cost. So basic, and then we have indirect cost as well, like the rent that we have to pay for, having a workspace. Things like that. So basically, any rupee that you spend to hire, train, retain, or replace someone should get accounted for. So the idea here is to compare these costs with the returns that are generated by employees. So it is like asking, if I spend 5 lakhs on hiring and training this particular employee, will I get 10 lakh worth of productivity from that person or no? That is the question. Okay. Now, human resource accounting has benefits. Like it helps managers to make better decisions within the organization about hiring, promotion, job rotation, or training. It can also assist in budgeting as well as resource allocations, and it can help in evaluate performance. It can help align HR with the long term business strategy. So with HRA, basically, companies can plan better. They can retain top talent better, and also with all these things, get ahead of the competition. So it improves transparency and it helps in regulatory compliance. If I am to give you an example, yeah, let us take Ramu and Somu. Okay, this is Ramu and this is Somu. So two employees, they both have same salary, but one of them, let's pick Ramu consistently contributes more value, right? Ramu is a good innovator. He brings in new ideas to the table. Therefore he proactively goes and helps out or gives better service to the customers. So maybe even customers ask for Ramu's service. Then how do you capture that value that Ramu brings to the organization versus what Somu brings to the organization? It is done, that capturing of value is done through human resource accounting, right? So, normally accounting Normal business accounting journal entries will not capture that because they are both because they are both being paid out the same amount of money. So both cost wise, having Ramu and having Somu is the same. But when a decision comes, who should you retain? Who gives you more value? Ramu. For every rupee spent on Ramu and Somu, Ramu is giving you more returns than Somu, right? Yeah, so that is why many top Indian firms are now paying serious attention to this HRA insights as well. So, is it all roses? No, there are thorns. Here also, there are limitations. First of all, one very important limitation is that it is very hard to qualify intangible things like loyalty or creativity and all. You can't exactly put a price tag on somebody's commitment to finishing that report at 2 a.m., right? Second, HRA also depends on a lot of assumptions, which can be subjective. And it may raise data privacy concerns if it is not handled properly. Because sometimes employees may feel uncomfortable knowing that they are being monetized, like vegetables in a sabzi mandi, right? It feels so violated and it feels so wrong. That's why I said this whole concept of HRA makes us wonder whether we are going back to the whole concept of what you can say, the whole concept of humans are just another piece of resource like machines or land, right? It feels like that. So, yeah. And also, these methods, these HRA methods, are not quite standardized as of now. So, comparisons across companies may not exactly be quite meaningful. And overemphasizing on this financial data could ignore softer aspects like the culture or employee well-being. So these are few of the limitations of doing this human resource accounting. In a nutshell, we can say that human resource accounting helps organizations value their most important asset, that is people. And how value them in financial terms. So it gives HR a stronger role in business strategy by showing how talent adds value to the bottom line. While there are some challenges, the benefits of HRA are too important to ignore entirely in today's competitive and data driven world, especially. Right? So, the next time you hear someone say, employees are our greatest asset and all, ask them, have you accounted for that? Most probably the answer will be yes. Right? So I hope you found this session about human resource accounting helpful. I hope this did refresh your memory about the things that you have learned already about human resource accounting. I hope it has become useful in your term and examination preparation as well. So until we meet again, happy learning.